Assalamualaikum, peace be upon us, distinguished speakers, fellows, and seminar participants. It gives me a great pleasure today to deliver the keynote speech to this international seminar on money and technology organized by Bogazici University. This seminar is an accurate answer to many issues surrounding the existence of money and the role of the central bank in the midst of the digital era, where technological advances occur very rapidly. Ladies and gentlemen, as we all know, the global financial crisis 2008-2009 upended central banking theories and practice. The problem was that prolonged economic stability and boom periods, while accelerating leverage, contributed to rapid credit expansion and asset price bubbles affecting shares and housing. Economic stability had created financial system instability, leading to the biggest financial crisis in 2008-2009 since the Great Depression of 1930s. Evidently, we all learned that price stability alone is insufficient to maintain macroeconomic stability if financial system stability has not been maintained. There is no macro stability without financial system stability. The fact that a crisis is an unprecedented event that potentially destroyed economic welfare is recurrently shown by the emergence of the COVID-19 pandemic at the end of 2019. The COVID-19 pandemic has caused enormous pressures on the economic both globally and nationally, reflected in world economic growth that is predicted to contract around 4% in 2020. Change in the strategic environment do not stop here, however. The complexity and uncertainty of issues faced by the central banks have and will continue to evolve in line with the advancement of digital technology. By its very nature, digital technology develops with rapidity, is transformative, and influences various aspects of our life. Ultimately, digital transformation is part of the digital technology development process, viewed as the total and overall effect of digitalization on the society. Digital transformation is fundamentally a phenomenon of disruption that is inextricably linked to the inevitable development and revolution of industrial technology. Klaus Schwab introduced the Industrial Revolution 4.0 concept that has fundamentally disrupted the life and work of everybody. 3 industrial revolutions have taken place before, but none boosted the scope and complexity of the Industrial Revolution 4.0. The advancement of new technology that integrates the physical, digital, and biological world has impacted all scientific, economic, industrial, and government disciplines. Several technology platforms across various fields have experienced rapid breakthrough thanks to the advancement of technology during the Industrial Revolution 4.0, including the Internet of Things, big data analytics, artificial intelligence, blockchain technology, and cybersecurity. Ladies and gentlemen, in a world characterized by rapid technological advancement, the challenges faced by central banks and other policy authorities moving forward will become more complex. One of the challenges set to face central banks stem from the central bank's role in terms of managing macroeconomic and financial stability in the era when digital transformation touched upon various aspects of the economy, including corporate business models, banking practices, and the future of money. As those challenges demand and test the ability of policy authorities to develop innovative new ideas, agile central banks must adapt quickly and appropriately to the changes. The rapid development of innovation and technology will also create massive benefit and risk regarding the future role of central bank. Consequently, it is critical for central banks to monitor and respond quickly in order to manage activity in the entire financial system. For that reason, such environmental changes could potentially broaden the central bank mandate moving forward. The fundamental consequence of digital transformation on the existence and role of central bank refers to the future of money. The emergence of digital currency, such as cryptocurrencies, has increased competition amongst payment system providers. Therefore, financial authorities must intervene to ensure financial system stability. Although cryptocurrency are considered high risk and with the potential to disrupt economic stability, it cannot be denied that they have unlocked a new era of currency digitalization. The concept of digital currency has application in terms of cyber risk, monetary policy instruments, influencing payment infrastructure in the transaction process, impacting financial stability, and others. In the process of implementing digital currency, therefore, the central bank must coordinate with various parties, such as the internal and external policy authorities, technology providers, regulators, governments, and other central banks, which will require careful management. Under such conditions, and considering the characteristic and potential risks associated with cryptocurrencies, various academics have opined that central bank must utilize digital technology to increase the use of central bank digital currency or CBDC. Prevailing opinion is that CBDC would facilitate risk-free payment for the public and create digital instruments for daily transaction. In addition, CBDC offers a viable alternative to cryptocurrencies, providing a higher level of security. Currently, there is also growing interest among the central banking community and experts to study the possibility of issuing CBDC. Besides the potential impact of enhancing payment, settlement, and economic transaction efficiently, experts are also focusing on the possibility contribution of CBDC to strengthening monetary policy transmission mechanism and maintaining financial stability. In reality, however, central bank reaction to developing digital currency is cautious and defensive. Nevertheless, the future development of digital currency is not a choice but an inevitability. Moving forward, the availability of digital currency in terms of token or accounts held directly by central bank is required due to the fintech developments such as Bitcoin and various other advances in other sectors that will persist. Therefore, studies regarding the pros and cons of issuing digital currency will continue to be published. In the case of Indonesia, for instance, the Monetary Policy Authority, Bank Indonesia, always pays attention to the urgency of adopting digital currency. Bank Indonesia considers public behavior or demand for digital money, which can be in the form of cryptocurrency or just digital money, which is currently very widely used, and its potential impact on the macroeconomic stability and growth. Bank Indonesia prohibits cryptocurrencies such as Bitcoin from being used as a means of payment because the official means of payment in Indonesia or legal tender is the rupiahs. However, cryptocurrency still can be used as a traded goods. Bank Indonesia, in a forward-looking perspective, also plans to issue the digital currency or CBDC. In this case, there are three main considerations in this CBDC issuance plan. First, digital currency is the authority of Bank Indonesia as the central bank in this republic. This is a mandate from the 1945 Constitution, which is spelled out through the Currency Acts and the Bank Indonesia law. In this context, Bank Indonesia plans to issue rupiah CBDC as a legal tender in the future. As a legal payment instrument, this rupiah CBDC will be prepared end-to-end, both in terms of design and circulation, as BE or Bank Indonesia does for banknotes and cards, both debit and credit cards. Second, the CBDC will and should support the implementation of monetary, macroprudential, and payment system policies, including the preparation of integrated financial market infrastructure, foreign exchange, and the financial sector. Third, Bank Indonesia will really consider the technology to be utilized optimally. This, among others, can be done by observing and adapting which technology or platforms are used by other central banks or countries. Distinguished speakers, fellows, and participants, it is common knowledge that central banks are going to face new realities moving forward, particularly in terms of several technology trends that are developing very rapidly. Therefore, central banks must work diligently to observe the potential benefits and risks of its technology as prospective innovative options to be exploited. The following lesson learned can be derived from the above discussion. First, experience from various financial crises has shown that central bank concern over maintaining financial stability will continue to increase. New monetary and financial policy instruments must be developed and integrated into a policy mix strategy, which will ensure a broader central bank policy impact in the real sector. In line with this, institutional strengthening of the central bank is unavoidable. Central bank independence must be upheld as sacrosanct, accompanied by accountable and transparent policy implementation. In addition, stronger coordination with government is required among policy authorities within their respective jurisdictional corridors. Second, with greater economic openness and strong interlinkages between economic activity in the real and financial sectors, the dimension of international interconnectedness in the globalization is an emerging aspect that will feature prominently in central bank policymaking moving forward. Therefore, central banks must prepare a policy strategy and response from the perspective of a hyper-connected and borderless world. The challenges of unknown environment demand stronger international cooperation initiative to build catalytic collaboration and ensure inclusive and sustainable economic prosperity. Third, as companies continually hone their business model in response to environmental changes, central banks must also be able to adjust their business process to strategic environmental changes in the tuna era, turbulent, uncertain, novel, and ambiguous. Central banks need to work hard, not only to optimize the benefit afforded by digital technological advances, but also to remain relevant in the era of digital transformation, which will only continue to accelerate moving forward. While the central bank policy mix is still a viable strategy, central banks are required to operate beyond conventional wisdom with novel practices. The introduction of new technologies in various economic lines has opened the door to new economic threats. Cyber attacks have enormous potential to threaten financial system and infrastructure in the country. Therefore, it is critical to develop systemic resilience through a reliable supervision and cybersecurity system. Ladies and gentlemen, in closing my remarks, allow me to remind all of us that tough problems always provide good opportunities for us to learn. The series of previous economic crises have spawned new economic theories and ideas, including next practices. In this regard, rapid changes in the strategic environment have fundamental implications on theories underlying central bank policymaking. Likewise, policymaking and implementation practices at various central banks have undergone change and strengthening that require development of the underlying theories. Practice ahead of theory, as extolled by Mervyn King in 2005. Last but not least, the rapid evolution of policy and institutional ideas in the central bank environment, encompassing the academic theories and innovative policy responses, must also be reviewed, studied, and documented. The conceptual thinking underlying the central bank policy responses is a critical reference for other central banks and policymakers to draw lessons from conventional practices and the best practices to resolve the problem faced, and for the academic community to explain and develop the new theories in more depth. On the other hand, the theories that continue to flourish in academia are a useful reference for central banks to assist the policymaking process in response to unfolding problems. That's all the reason why we are all here in this special forum. Let me stop here. I wish this seminar runs smoothly and successfully. I hope all participants involved can go through productive discussion and get optimal benefits from this forum. Thank you very much.